Now, day after day, fresh indications keep emerging of how the Indian economy is estimated to do much better in the current financial year than was expected earlier. In December, it was India's central bank, RBI, which revised its growth forecast to 7 from 6.5% for FY24. Now, the first advanced estimates released by the Indian government too have shown an uptick compared to the previous estimate for the ongoing financial year. Take a look.
The first advance estimates released by Indian government shows country's GDP will grow by 7.3% in the current financial year, that is 2023-24, slightly faster than the 7.2% growth in 2022-23. RBI had increased its growth forecast in December to 7% for financial year 24 from an earlier estimate of 6.5% owing to the robust growth in high-frequency indicators. As per the first advance estimates of national income released by National Statistical Office, the manufacturing sector output is estimated to grow to 6.5% in the current fiscal as compared to 1.3% in 2022-23. This sector accounts for around 17% of India's overall GDP. Similarly, mining sector growth is estimated at 8.1% in the current fiscal against 4.1% in 2022-23. Financial services, real estate and professional services are estimated to record a growth of 8.9% this fiscal compared to 7.1% in financial year 23. Agriculture, livestock, forestry and fishing growth, which contributes around 15% to the GDP, is pegged at 1.8% in financial year 24. The mining and quarrying industry, which grew at 4.6% in financial year 23, is seen growing at 8.1% in financial year 24. The construction sector is likely to grow at 10.7% year-on-year from 10% in the current fiscal. Similarly, public administration, defence and other services growth is estimated to grow by 7.7% this fiscal against 7.2% in financial year 23. Growth of trade, hotels, transport, communication and services related to broadcasting industry has been pegged at 6.3% in financial year 24. The growth in gross value added GVA at basic prices is pegged at 6.9% this fiscal. Terming the advance estimates as resilience and strength of the economy, India's finance ministry in a post on X said, and I quote, "The first advance estimates of financial year 24 show no let-up in growth momentum in the economy. Resilience and strength of the economy, underpinned by reforms of last 9 years, have laid the foundations for the economy to sustain a healthy growth rate in the coming years." Foreign portfolio investors continued their buying spree and poured close to $579 million in the Indian equity markets in the first week of January, driven by confidence in the country's robust economic fundamentals. Additionally, they injected $484 million in the debt market during the period under review. Data with depositors showed, according to the data, foreign investors made a net investment of $575 million in Indian equities this month till January 5. This came following a massive investment of around $8 billion in December and $1.08 billion in November. Dheeraj reporting for DD India.